Thank you. How is everybody today? Doing well? We have our esteemed panelists. It's great to see everybody. Really quick, just welcome to Tampa, Florida. I'm not originally from Tampa, but I've been here about 10 years. And the growth that we've seen in this ecosystem and in Florida as a whole is just absolutely amazing. So thank you for the support. I wish we had a little bit better weather, but we can get over that because we got good people in the room. So thanks again for having us. Just want to start this off. We'll do some quick introductions of the panelists, and then I can introduce myself. So.
Hi, I'm Julia Taxin. I'm with Grotech Ventures, based out of the DC area. We are traditional, what used to be Series A, traditional Series A investors, writing $3 to $5 million checks into early stage B2B companies.
Hi, my name is Sherman Williams, co-founder and managing partner of AI and Ventures. We invest at the intersection of deep technology and dual use technology. Dual meaning companies do business both with the government and in the commercial sector. We have a separate initiative where we invest in veteran-led startups, and we invest mainly at the seed stage, but we do also do a bit of pre-seed investing.
Hi, everyone. I'm Heather Buffo. I'm from Republic. Republic is a New York-based company. We are a private investing platform that gives you access to opportunities to invest in companies across stages in retail, capital, and crypto. I specifically work on our retail division and helping founders raise using SEC exemptions allow you to raise up to $5 million from both credit and non-accredited investors.
And my name is Saxon Baum. I'm the VP of Investor Relations at Florida Funders. Florida Funders is an early stage venture firm located here in Tampa. We also have a dual headquarters in Miami. We focus on early stage investing, primarily in the state of Florida and the Southeast, but we have investments all over the country. We wanted really to talk about today what us as investors look for in terms of entrepreneurs and attributes of those entrepreneurs. What are some things that you all look for when looking at an entrepreneur? What are the top 3 things that you all look for in those individuals?
So for me personally, I like honest entrepreneurs. I appreciate the salesy entrepreneur, but at the end of the day, I like somebody who's open and honest with me. And that starts right with diligence and getting to know people early and then tracking them over time, which is also very important to us. I also like to work with entrepreneurs that are self-aware, and that usually manifests in the way of being able to know what you're good at and what you're not, and then hiring those gaps around you and hiring smarter people than yourself, which I know can be hard from time to time for some CEOs to kind of take a step back and hire smart people around them who might know more than them, and then also passionate entrepreneurs, right? Because you're going to be selling your business and your product day in and day out for 3, 5, 10 years sometimes. So being able to get up every morning and be passionate about what you're selling.
Yeah, so for me, I think about the concept of founder market fit. So you can have an idea, but are you the right person to execute upon that idea? So that's like top of mind for me. And then I do ask questions about your background because I'm trying to assess some sort of leadership, determination, grit that you've kind of been through something before. This is going to be quite the journey. Actually, it's going to, as everyone says, it lasts longer than most marriages, right? Particularly my investment in you will, right? Locked in for 10 years. So I'm really looking for someone that's been through some things. Not necessarily a situation where their life has been up and to the right, but like they've been through some difficulties, they've overcome them. So those are a couple of things that I really look for. Founder market fit is kind of the technical skill set. And then from there, it's the leadership, determination, and grit are kind of those qualitative factors, whether or not you actually have those.
So there are a lot of things that I like about founders, but let me talk a little bit about Republic. We're a little bit different from your traditional venture investor because you're able to engage your broader community in your fundraising. So founders that tend to be successful on Republic are ones that have a large community surrounding their company, and they have an audience that they can draw from to bring in check sizes anywhere from $100 all the way up to $1 million plus. So in our platform, founders that are extremely successful have that community to leverage. They're excellent marketers, and they know how to talk to customers as investors and investors as customers and really translate those folks into one and both of those identities. And finally, I think what's already been said as well, passionate founders who really know how to communicate their vision effectively, and truly don't waver. I think, as founders, I've never been a founder, but y'all have a lot of decisions to make. And I understand the process that it takes to figure out what's the right path for you. But founders that really have that conviction about understanding what path they're taking and then really focusing on it and just going with it once that decision's been made, I think really stands out to me when founders are looking to use our platform and use other resources as well to continue fundraising.
So that sort of covers, excuse me, the qualitative side of what a lot of venture firms, early stage firms look for. And I know the qualitative side, especially for us at Florida Funders, is as important, if not more important, than the quantitative side when looking at early stage companies and technology. Would love to talk a little bit about the quantitative side, though, in terms of traction. So a word that is always used in this ecosystem is traction. And a lot of people think traction is just revenue and sales, but really that's not always the case. So I wanted to pose the question, what type of traction gets you all excited as investors when looking at an early stage business? And maybe it is revenue and sales, but are there other things that you all look for?
So yeah, revenue and sales is important, but what we look for at Grotech is product market fit, right? And so the way we assess that is talking to customers. Even if a company's in its early stages, if it has a pilot out there, we'll talk to that customer they're in pilot with. If they don't have the pilot out there, what we'll do is introduce them to potential customers, which is also value add for the company. And it's a good way for the company to assess us as investors as value add. But it allows us to kind of get an unbiased view of what this product could be in market with these specific customers.
Yeah, I mean, so well said. Product market fit is absolutely top of mind when it comes to quantitative factors. We invest fairly early though, so you won't necessarily know about product market fit at the seed or pre-seed stage. So what I'm really looking for is that you have done the work to understand the voice of the customer, right? So you've gone out and done customer surveys when you're really early, because I'll invest pre-revenue. You've done surveys. Somehow, you've just talked to 1,000,001 potential customers, et cetera. That's what I'm looking for. And then after you have had a little bit of traction, what I'm going to do is I'm actually going to talk to those customers just like Julie said.
So at Republic, traction is different, I think, for every company, particularly depending on what industry you're in. Large B2B SaaS enterprise company having, a few LOIs, very different from a consumer company having, hundreds or tens even of thousands of customers. So we evaluate it on a deal by deal basis. I think for us, traction with revenue is definitely helpful because it shows that you have, well, first of all, some recurring revenue to keep you going. Raising an equity crowdfunding round is actually quite time consuming. So you need to be able to continue to generate income while you're in that process. But as you're looking at traction, again, revenue isn't always the best indicator of what your traction looks like. Sometimes it could be, your community following on social media. But I think to Sherman's point, it really depends on who your customer is and knowing your customer and knowing that your traction is coming from the right place. If you're a space company and you have a great social media following, but you have no customers, then that's not really helpful. So it's a kind of broad answer, but I think traction, you have to know what your traction is supposed to look like in order for you to be sustainable and keep going. So if you're measuring the right things and you're looking at your audience appropriately, then that's the traction that we look for. And of course, in market, generating some revenue, we have some benchmarks, but really understanding who is your audience is the most important thing.
Heather, this is a question for you because the three of us are more on the traditional venture side. How does due diligence work at a company like Republic when you're looking at so many deals?
You want me to share my trade secrets in front of all these people?
How do you guys look at companies?
Yeah.
And I'm assuming it's a bit different than a traditional venture firm.
Yeah. It actually isn't. So we take a pretty traditional venture lens. We assess all the things that a lot of venture companies do: team, traction, market, size, opportunity. So it's a very holistic view across all those things. Again, we are industry agnostic, so it's different per company, but we have a pretty straightforward process. If a founder is interested in raising with us, we look for your deck. If it looks like a right stage fit, we'll get you on the phone with a business development person. They'll ask some deeper questions. If it still looks like a good fit, we send you a due diligence questionnaire Takes about a half an hour. It's some pretty basic questions, about your business to date. We get your financials off the shelf, balance sheet, P&L, and then establish all of that into a memo to present to our investment committee, which meets twice a week. So pretty kind of standard stuff.
And it is fairly traditional.
Yeah, and I mean, our goal is just to be more accessible. And a lot of the companies that are raising with us, of course, we are an investing platform, so investors are looking for venture scale returns. So a lot of companies are raising venture funding anyways when they're coming to us, but they want to give their community an opportunity to invest. They want to be able to give their first customers, their friends or family, the people that really believed in them and got them their start, but may not have access to angel investing vehicles, the ability to invest in their companies. So we really do take a pretty traditional venture lens, but try not to ask founders to do anything outside of what they're already putting together for anyone.
Great, thanks. I always love to ask this question, and it's different perspectives up here, so I think it'll be interesting. What industries and verticals is everybody most excited for over the next 5 or so years?
So I've personally been focused a lot on supply chain and logistics for the last, I'd say, 8 years before it was in vogue. There's many firms now, I feel like, that are focused on that today. Future of work, obviously. I made an investment in a company in 2018 prior to COVID. Since then, I feel like the future of work industry has been fast forwarded, like many industries, by 5-7 years or so. So there are some really interesting concepts and companies and products out there that are addressing the future of work and how people want to work going forward.
Yeah, for me, space technology, sustainability technology, healthcare technology, and Web 3.0 are some of the areas where I'm just seeing, wildly talented people, particularly space, sustainability, and Web 3.0. Just wildly talented people coming into those fields. Really excited about the growth there. I do a lot of deep technology investing. So those companies have the ability to raise, particularly in those spaces I just mentioned, except for Web 3.0, have the ability to raise non-dilutive funding from the U.S. government. And the amount of non-dilutive funding coming down from the U.S. government is increasing pretty significantly. So those segments are pretty exciting for me right now.
I think our top industries are probably consumer sustainability, particularly in climate tech, and any company that demonstrates some sort of social impact, which isn't necessarily an industry, but rather a feature of your company. I think our investors just care a lot about making investments that have an impact and that are changing the world in some really beneficial way. Of course, obviously venture investing is extremely risky, so you never really know what's going to hit. And so I think a lot of people are putting their dollars towards things that are urgent matters, especially climate. So I get really excited about those things. I think for our platform, consumers also just very accessible to retail investors. They're most likely to be customers of the companies that they're investing in, or at least can be if they're, they can be a customer of a chip company easier than a supply chain company. So all of those things I think are themes that are really important these days and important to invest in anyways. But I think for Republic investors, those are the areas that people are most excited about.
I want to talk a little bit about the market. So there's more money now in private equity and venture capital than there ever has been. And we've seen truly a downstream effect with private equity dollars moving into the types of opportunities that I think we're all used to. You guys feeling any pressure that you have to move a little bit further downstream, going to that pre-seed, that seed deal that maybe you were a bit weary on beforehand? Are you guys feeling that pressure? Or is that something that is just out there as a rhetoric?
I can start just to mix it up, keep things spicy. No, I think that there will always be need for that earliest stage funding. I think you're right that there definitely is some tailwinds going towards later stage. And luckily at Republic, we are a financial technology platform. So we are able to make offerings across different stages. We have a private accredited only deal room that has some of those later stage deals. And then we have a capital arm that operates like a more traditional VC. So there's a little bit of something for everybody, I think. In terms of our focus in retail, I think we really want to stay earlier stage. And I think equity crowdfunding presents a really unique opportunity for companies at that stage to be able to get to the next milestone that a lot of companies just can't make it to in the traditional venture setting. So while I do think there is tailwinds in that way, I think it's actually better for our industry as a whole, just to show that the private market is growing and that it's a place that people should think about putting their investment dollars when it's frankly just so much larger than the public markets, and the potential is so much higher.
Sure. So we are feeling the pressure a little bit. We just we're in our 10th fund and have had the same kind of strategy for the last few funds now. And we find ourselves in a market where the Series A used to be a $6 to $8 million Series A. It's now 10 to 15, up to $20 million Series A. And so I will say we are going a little earlier based on the actual letter of the round, right? So whether it's a Series A or a seed. However, those companies that are coming to us for their seed have already raised $1 million in friends and family, which used to be a seed. So I feel like things have shifted, but it's only based on the nomenclature and the actual number based on the round. And then we're also having to get more creative on syndicating our deals. And we were already syndicating all of our deals, but we're just having to get much more creative about going to other similarly sized firms who are getting that same pressure and saying, hey, let's do diligence together and try to get in and lead this $15 million Series A here.
Yeah. So I think as an investor, you have to have some level of discipline. So with the market, it was wildly frothy. Not wildly frothy, but it's very frothy. And you see there's been a correction in the public markets. I haven't checked the market today because it's been here. I'm not sure what it's doing, but I know the last...
It was up pre-market. I don't know about now.
Okay, exactly. So I think that I heard one of my really good friends in venture gave a great analogy how, the public markets are it's like a train pulling something with a chain, and there's slack in that chain. So that means there's a timing difference between what happens in the public markets and what happens in the private markets. But it will eventually happen because a lot of times in the private markets, your multiples you kind of base that off of what the public markets are doing. So with it being down, that's going to filter down into the private markets. We already invest quite early at the seed stage and pre-seed stage. I think that those rounds, while they will come down, they will only come down so much because the fact of the matter is there's just so much money at the seed stage with Greylock raising a $500 million seed stage fund, et cetera. That's naturally going to bid up prices for those seed stage deals. But I think that will be tampered a bit by the fact that the public markets are having a lot of issues.
So none of these investors up here are out of Silicon Valley. Sherman, you're probably the closest being in New York City in terms of the market, looking at, the major markets in venture that have been major markets over the last however many years. We're seeing something in Florida that I think everybody else is seeing too, that great companies and capital is leaving the Valley, leaving New York, and coming to secondary and tertiary markets. It's been amazing for us in Tampa and Miami, and I think the entire state of Florida, but would love to hear everybody's insight on that. Are you seeing in your markets, and tell us what market that is, are you all seeing that growth as well? And do you think that continues to happen and the diversification outside of those major markets continues to happen?
Can I say something real quick? I like to reframe it. So there was 160, according to NVCA pitch book, there was about 166 billion invested in venture in 2020. And in 2021, there was about 330 something billion, right? So it's not that money's leaving these places, because you look at the numbers, they're actually not leaving San Francisco, and they're not necessarily leaving New York. It's just that other markets are also doing well. And I think we as a country, this is putting my veteran hat on, we as a country need these other markets to do well to keep up the viability of the United States as the tech leader of the world, right? So we shouldn't necessarily frame it as money leaving California and leaving New York. And the numbers actually don't really bear that out. It's more so you've seen like Steve Case, kind of the rise of the rest, coming to the levels of those areas. But we still need the New Yorks, the San Franciscos, the LAs, et cetera, to do well. So, yeah.
That's an interesting way to put it. Despite being in tech over a year, I have not been to San Francisco since I was 9. So I don't know what it's like in California. It feels like all that money is coming to Austin. That's where I live. And shout out to my Austin friends and portfolio company here, Blended Sense. I I think we do have to reframe how we think about where money is and where people are, because so many companies are distributed. And so you could say, the investment is coming out of Silicon Valley for a Silicon Valley company, but most of those employees might not live there anymore. So I think there's a bigger problem outside of venture in terms of where money is going and how that's affecting housing markets and salary inequality, income inequality in different communities. So I think that conversation is like way outside of venture scope. But I think our role in that can be to continue to be a part of the movement to bring more funding to communities where people are becoming distributed and where talent has already existed all along, but there just hasn't been enough attention paid to it. So I think for us as a online platform, we are geography agnostic within the United States. You just have to be U.S. incorporated. We even have companies that are Delaware C Corps, but operating in Africa and other parts of the world. So we're excited for geographic expansion, and I think have always been looking in lots of different places. But I'd like venture to think more critically about, the places that are getting funding. How does it affect the communities of the people that are taking that funding, and where those businesses are actually operating?
So yeah, we've been around for 40 years now and investing exclusively outside of Silicon Valley during that time for numerous reasons that I just got the 2-minute warning, so won't go into. But COVID has equalized the playing field, right? It's made it so people can live where they want to live, regardless of where necessarily the quote unquote best companies are. And I was telling Lakshmi earlier, I posted on LinkedIn that I was coming down here, and I had 15 people reach out to me to say, hey, I relocated to Tampa. We should meet up. These are people that have no ties to the Tampa Bay area. And so, as you were saying, there's so much excitement around the opportunity in these other markets outside of Silicon Valley in New York. And so, we're really looking forward to that.
So final question, because I know we have 2 minutes. Sherman, you brought up Web3. This is a topic when you're in Florida, you can't go anywhere without hearing about this, especially in Miami, the crypto capital of the world. So I want to ask a question. What part of Web3 is everybody most excited about?
Humbly, I don't think I'm necessarily qualified to answer. I'm still in learning mode myself, very much so. But I think that for my, in all humbleness, with the knowledge that I have, I think that people that are able to operate cross-chain, across the different layers, that's really, really interesting. I think I'm really excited for Web 3.0. I mean, there's so many applications for it, and a lot of times, every company you see, you have to ask, why does this need to be on the blockchain? And I've been asking that for years, but the answers have been getting better and better over time.
I agree with that.
Yeah,
it used to be to get a better valuation.
Yeah,
now it's legitimate.
And the really interesting thing about Web 3.0 is that I am seeing wildly talented people move into that space, and they're going to figure it out. So yeah.
Well, I'm really excited for everyone to know what Web3 is, myself included at some point. I also am still learning. I think the most exciting thing to me is I do think that blockchain technology is going to completely transform everything that we're doing now. And I do think that I'm excited for Web3 to take down Web2, like Facebook, and y'all can, anyways. I'm really excited for, I think this is going to be part of a movement of the distributed model where there is an actual feasible opportunity for users and customers to have more power and control over themselves, their data, and the way that they interact using the internet and these tools. So I have big hopes for what it's going to look like technologically, societally, politically going forward. I also think anytime that there's a new industry emerging, there's opportunity for new leadership. And I would really love to see this industry led by, different kinds of people from different places with different backgrounds that looks a lot more diverse and dynamic than what we have in a lot of our traditional tech sector. So I'm just excited for the opportunity, and I really am looking forward to seeing leadership that I'm already seeing from women and founders of color and developers and people who might not have seen themselves in the entrepreneurial path, finding an opportunity to do that with technology that I think is ultimately going to be extremely mainstream.
Nothing real to add there, but looking forward to it going from a buzzword to an actual companies that are actually
practice. Yeah.
I do want to say, if you're a founder of color or woman, this is the time to move into Web 3.0. Before things get established, when the establishment comes in, it tends to not work out for some of those groups for various reasons. So if there were a time to move, this being very frank and blunt, the time to move is now, because you can really establish some sort of market share there.
And if anyone is thinking about it and doesn't know where to start, I'm reading a book called The NFT Handbook. I promise I have no promotional relationship to it. I'm on chapter 8 if anyone wants to start a book club, but it's teaching me about blockchain and crypto and NFTs all together, and it's very clear, and I like books more than articles, so shout out to the NFT Handbook.
Awesome. Well, let's give it up for our panel. Thank you all so much for being here. Thanks for coming to Tampa. Everybody enjoy their time here. And if you need anything from a local, you can ask myself, Allie, Lakshmi. We'd love to help. So thanks a bunch.